Hello and welcome. This is Roy. This time I'm sharing with you rather long clip taken from an hour's long video that I've just finished to record for my subscribers. You will see the various markets that I cover in the long video introduced by me early on. The clip, I hope, gives you quite a bit of food for thought about the very dangerous situation that is now taking place, actually prevailing in China. Um, this is a situation that is unlikely to leave any corner in the world unaffected. It is a pretty serious situation that requires full focus and attention of any serious investor. Someone who has money at risk has to be aware of what is coming. It's nothing short of a big tsunami, in my opinion. So I hope that the clip will awaken some processes in you to maybe investigate further what's going on. You can learn more about my service if you're interested to take just a trial that will give you access to 5 videos, plus you can ask me specific questions on markets of interest to you. You can pay with PayPal or Skrill or Payza, or get in touch with me if you want to consider a different way of payment. The trial is very modestly priced, and my service on the whole is modestly priced for the kind of analysis, detailed analysis, and the frequency and the scope and the number of markets that I cover. It is modestly priced. If you're an active trader, I'm sure that I can help you. You can also ask me very specific questions on markets or situations that you are involved in. Other than that, I just want to mention that if you take the trial, you will also be able to check back on many videos that I recorded in the last month. I normally keep 1 month worth of video on archive, so that you can see a bit various situations that occurred in the past and how I reacted to them and how I anticipated them, etc. So I hope you enjoy the clip and have a great week. Bye now. Hello and welcome. This is Roy. Here are the charts that I have in this video. I have the dollar index, the euro US dollar, the US dollar Swiss franc, British pound, Japanese yen, light crude, Brent crude, FEX, TNX, TYX, TLT, junk bond, ETF, gold, silver, Dow, S&P 500, the Russell 2000, the S&P Global ETF, the DAX, the Hang Seng of Hong Kong. We'll have a look in this context at a very interesting article that appeared on David Stockman website, and I will also look in this context at the Chinese real estate ETF Tao, symbol Tao, and we will terminate the video with a look at Banco de Chile, stock quoted as an ADR in the US. Now here's an article that made me jump from my chair. This is the article. This is in the website of David Stockman's Contract Corner. Okay, so you can, I already mentioned that, and I have great respect to this incredible guy, this very sharp analyst, observer. I am happy that he's running such a website with lots of very high quality information. The only thing is you can have excellent reportage, excellent analysis of a situation. What matters to us, whether it is already in the price or not. It's very nice, to read enormous, lengthy, detailed analysis of the economy, etc. There's nothing wrong with it. But for us traders, the way I view things, the question is whether it's already in the price or not. And if it's not in the price, how much of it is going to come? And there are no scientific answers here, but the thing is to try to observe and to tell as early as possible of a major imbalances that are going to be rectified by the market, yeah, We have discussed also the idea of reversion to the mean, etc. And I think that what we've got here in this article is nothing new, but at the same time it is very new in the sense that it is pinpointing the level of the madness, the level of the bubble that is now affecting China, and initial proof of the bust of the bubble. Now I'll go with you. I won't read the whole thing, but I will highlight the main thing that you can find this article under Contra News Views. Okay, so if you go on the website of David Stockman, you can't see that. Wait, I'll bring it down so you can see it. Yeah, you can see that now. David Stockman's contracorner.com. Yes, you get to this website, you go down to this tab here. You click and you will follow the article China Real Estate Mogul Outs Emerging Apartment Crash. Year-on-year sales down 13, 21 and 36 during January, February, March. So it started down in January 13%, February down 21%, and March 36%. Well, I think that anyone with minimal level of understanding of mathematical, even primary school, you can pick up the trend here, 13, 21, 36, where it's going. It's increasing. It's increasing. So an increase here basically tells you that the market is crashing. Yes, sales are down. You'll see in a sec, inventory is zooming to the moon. This market is not only saturated, there is no way that it can be accommodated anytime soon. So the crash is fully on. The crash is fully on in a second largest, some say already the largest economy in the world, with very shaky and shady foundations of the credit system. So I think this is an extremely toxic situation here, really scary. This is a leaked recording by the vice chairman of Vanke Group, China's biggest property developer, confirms, as the Telegraph's Ambrose Evans Pritchard reports, what the birds have been saying for months. It is a dangerous bubble and already deflating. Okay, so what I think is really, really important for us is this. Look, in 1990, Tokyo's total land value accounts for 63.3% of US GDP, while Hong Kong reached 66.3% in 1997. Now, the total land value in Beijing is 61.6. Emphasis Beijing. It's just one city, my goodness. 61.6% of US GDP, a dangerous level. China has reached its capacity limit for new construction of residential projects, and I don't see any possibility for a rise in home prices. Okay, the simple chart below highlights all one needs to know. Inventory is exploding, and ESMA concludes housing production per 1,000 people reached 35. Even when the housing market is hot, no country has a figure of greater than 14. This should cause alarm. Indeed. Indeed. So I just want to remind you, in case you don't make the connection between Tokyo's total land value accounts for 63.3. What happened since 1990, 1989 in Tokyo is that we had basically market going down since then. Meaning this is a bubble that is going to grip the economy in a lethal grip. This is not a wishy-washy event. This is something that is here to stay for many years. For many years. And it's going to affect the economy on all its facets because it is so dominant. And you saw what it did to Japan. And in Hong Kong, there was a complete meltdown after prices reached that level. There was a huge crash in Hong Kong. And the same thing is underway now in China. It's just that it's just beginning. And I think that there could be a fantastic opportunity if the market is not yet reflecting the full scale, and I don't think it does, then there is a great opportunity for us. He says, I don't see any opportunity for rise in home prices. And just look at that. This is housing inventory in China, and in the last 3 years we're just heading. So the more inventory, that means falling prices. Yes. So what you see here, this huge surge, that is beginning now to be reflected in the crash in the prices, because it tells you here that sales are down. Sales are down. When sales are down, people not raise the price. They cut down the price. So sales are down, inventory is up, prices are collapsing. And that's the picture, the latest that we have here from China. You can read the whole article. You can go on the website. There are several other very interesting articles. Actually, it's a fantastic website. I want to now show you the ETF that I chose, and there could be others. If you do research around the world, you might find other things. If you tell me, I'll share it with everyone. This is Tau. The symbol is Tau. It's traded in the US. It's China Real Estate ETF. Okay, we're going to analyze that. This is the description. We're going to see the chart of this one. The chart is right here. And we have a bottom in 2008. I have no doubt in my mind 2008 the bottom is going to look, the price is going to look expensive. It's around 8. This is going to crash like I don't know what. If the situation in China, and I think it will now further deteriorate, we're going to have a replay of the subprime. We're going to have a replay of the subprime in the US. We're going to replay of what happened in Tokyo. Yeah, so 8 might look like a big deal in maybe in a few years, maybe in 6 months. I don't know. The wave count is not super clear to me, and you see there are no film labelings here, although I have now focused on the very short term here in the last few weeks, and I think I'm showing 5 legs down. So it could be that we have a tiny ABC here, and it's now ready to crash through the rising support line here. I'll show you here the daily. You see that's 1, 2, 3, 4th wave. I think we have a clear 4th wave here. Yes, I'm pretty confident on that, and I think it's heading lower. Now, we'll see whether that's going to turn into an ABC and we're going a lot lower, or whether there is a different pattern. Now, why do I bring it up? Now, my point is as follows. I think that it's not a bad idea to investigate long-dated puts on this ETF and maybe other vehicles that are related to real estate in China, to buy long term. Start building a portfolio of options, long dated options, puts that give you at least, I would say at least 1 year. 6 months maybe could still work, but 1 year and beyond that. If you can have 2 or 3 years, that'll be great. If you find vehicles that give you 2 or 3 years out like that, and everything playing on the strength of the statistics that I've just presented to you in that article.